Oh boy, what's up, people? So my computers are running really slow this morning. I have no idea what's going on. I'm very upset. I think it's my computer. I need to get new computers. Something always exciting. So we were all expecting the market to pull back, weren't we? So you could have definitely expected the market to gap down to ruin all your plans and hopes and dreams. All your hopes and dreams going down the drain. But I want to welcome all the noobs that have been coming to the chat room. We've been having a lot more fun. The chat room's been growing day and day. This one's going out to my boys in the stock hideout chat room. Seems like they have like 200 people in there, but there's a good maybe 20 or 30 people that actually are talking in there. And we were Sunday night. People are hanging out in there. Guys, relax. Okay, I know you want to talk about stock market, but Sunday night, I was in there too because I'm a degenerate as well. Just wanted to see what people were feeling. But yeah, sometimes you just got to give it a break. Turn it off. We all knew this market was gapping down today, so if it's a real bull market, like I've been saying, we're probably just going to make up most of this gap. I really don't even know what the market's doing, but I know that dry was gapped down, DRYS, and we were talking about going long the FAS just based on price and considering the fact that the financials have run so far so fast that buying the FAS at these prices was a good idea. Now, again, you got to understand something about these ECNs and ETFs, these double, 2 times, 3 times things. Don't try to analyze it. They are sentiment indicators to be able to trade which way you think a sector is going for the day. I don't suggest that you hang on to long ones, short ones, anything for more than a couple of days, because generally the value of them don't really correspond with anything. If you try to figure out what's inside there and what they really should be worth, because if you think about it, the FAS, F-A-Z, has fallen off the earth. Meanwhile, the FAS, you would think would be skyrocketing. But that one's only going from 250 up to about 10. Meanwhile, the FAS has gone from like, I don't know, 80, 90 down to $8. So explain that to me. I don't know that much. Maybe I'm not analyzing it well enough. But again, they are sentiment indicators to trade during the day. And as far as playing the gaps, which is the guy in my chat room has been dead on with that one. He was buying FAS at the close on Friday, looking for a gap up today because he thought the market was going to gap down. I was with him, so we made some money on the FAS this morning, and right now I'm just waiting for my computer to get back up. Okay, now what I was talking about is how I didn't want to go buying calls or any more common stock, and I've been selling into this rally, and I'm pretty much done with a lot of the stocks. I got maybe 100 shares of this, that left over. I got out of my X, which looks like a good thing. It was trading at 28 last my computer was up. So I was talking about a concept called selling puts, selling naked puts. Just saying it's funny in a way. Selling a naked put is a way of going long the stock at a lower price. So here's what we're going to show you. Let's assume you wanted to buy U.S. Steel, and the stock has gone from 17 bucks to 30. So you're not really too enthusiastic about buying a stock that's nearly doubled in 3 weeks. So what you can do is when you sell a naked put, you're basically betting against the guy that's buying the put. So somebody out there is thinking that that stock's going to go back to 15 bucks by, let's say, September. So if he's buying that put, you're selling it to him, betting that it won't go below 15 by September. So depending on whether or not you win or he wins is where you profit. Now let's explain. The $15 put, let's say, is worth $1. So that guy is buying it for $1, hoping that by September, in theory, the stock will be at 14 at least to break even. And you're betting that it's going to stay above 15. So what happens? You're taking in that dollar. So if as long as it stays above, so the stock could basically go up, sideways, and even down. But as long as it's above 15 bucks by September expiration, you get to keep that dollar. That guy loses, you win. Now the risk reward is not as good as a lot of different other options and strategies out there, because what you're really doing is you're saying that you're willing to buy U.S. Steel at $15 minus the dollar that you took in. So you're willing to buy your U.S. Steel at 14 bucks. So basically you're risking $14. In theory, if U.S. Steel was actually to go to zero, you're willing to risk 14 bucks just to make that point. So the risk reward, if you look at it that way, it's not a great strategy. But if you're convinced that we've seen a bottom in the stock market, which I am, you can go out a few months out. I've been selling, Junes and Septembers and even January of 2010, selling some index options where as long as the market doesn't crash again, they're going to be disintegrating every month. So even if the market goes nowhere, slightly up, slightly down, time is going to erode those puts that people are buying where you're going to be making money. Okay? So, and again, also what I do is I take, I sell 30, 40, maybe sometimes 100, depending on how comfortable I am with the position. So even if they come off a quarter, you can make some money on these positions. So again, but you are risking a lot to make sometimes pretty much nothing. But if you look at it where you don't think the stock's ever going back to that price, it's sort of free money. Like GE 250 puts. I really don't believe GE's ever going to even break 5 ever again. Okay? So selling 250 puts for January, that's pretty much free money. You're just waiting for those to expire. There's a good shot they're going to expire worthless, and you just have to wait it out. Granted, you're not making that much money, but to me, it's free money, and you might as well lay it out. If you're willing to buy 5,000 shares of GE at $2 or whatever it was, $1.75, because I sold those, I think, at 75 cents. So I was willing to buy GE at $1.75 in January. And right now, they're only worth 20 cents. So I could take that money off the table, but I'm just going to sit and wait for expiration because I think that stock's never going below, $5. So I hope I explained that enough to you. And if you have more questions, just email me and I'll explain it to you some more. So let me go see if I get my computer back up, and I'll see you guys in a little while. Oh, by the way, it's 4:20 today, and the funny thing is I've actually run out of tarp. There's no tarp anywhere in my house. I actually went into my drawer, scraped out some stuff last night, put it in a pipe, so it would happen. I think I told you the other night I was smoking, and I looked to my left, and I thought I was in the middle of a conversation with somebody, and then I realized I was alone, confused, and stupid. That's it. All right, I'll see you guys later. Bye.